Good morning, everyone. I'm Martha Stokes. I'm a chartered market technician. I'm a retired buy-side, and I love to teach. I've been teaching all of my life, and I want to share information that is not readily available to you from someone like me who's a buy-side. And a lot of buy-side institutions don't think you can learn, don't think you can figure it out, and they would prefer that you just let them do all your investing for you. But a lot of you are traders and you want to make extra money, or maybe you've been laid off, or maybe you were retired and you just don't have enough money to make it. And trading as a business is an opportunity that is like a small business, but it has a huge amount of advantages. Your inventory is the stocks that you trade. So at the end of the year, it's the total sum of your profits. It's not each individual stock that you have to do in a Schedule D and then pay high taxes, because taxes have gone up on trading. When you're a hobby trader, when you're trading as a business, your tax expenses have gone, and your expenses are your income is higher because your expenses are be able to be deducted. Sorry about that. This sounds rather confusing. So as a hobby trader, you can't deduct any of your expenses. So it's either where you made a profit or you made a loss. If you made a loss, then you cannot take that off to lower other income that you have. If you are trading as a business, you can expense everything, every expense that you have, including a small office, your percentage of your electricity of your house, the percentage of the office that takes up your house, your water, your sewage bill, your everything is a deductible. So it makes it easier for you to be able to expense real business expenses if you're trading as a business, a small business, and you can use an LLC or S corporation to do that. And it is very, very lucrative to do so, because then you are confident and you actually trade better. So what we're looking at today is bottoming stocks. I know we talked about selling short before, but now we need to focus on the fact that we have a lot of activity that is going on that are bottoming stocks, and we are going to have bottoms starting to correct, move forward, move up, go sideways, and then complete. This is the completion level for this particular example stock for this tutorial. And it will stop here, move sideways usually, or it will gap over this resistance that concludes right here. We can see that it is deeply over what you call oversold, or I call panic selling. There's been a massive selling by smaller funds, but the dark pools moved in right here. So they moved in right here, and they said, no, we're going to support this because we're looking at last year's April flash crash, and it's below that. So we have a bargain price. We also know that this stock came in with $1.03 earnings, and the prior quarter was 95 cents. So it has improved earnings. So what the heck is it doing being sold like crazy? Well, some guru out there is telling everybody to sell it because they already have sell shorts set in, and they want to make a profit as they use their buy covers to fill your panic sell orders. You have to pay attention. Bottoms are critical, and you have to very carefully monitor them, because that's where you can see the dark pools. This V is steep. This is dark pools bargain hunting, and they've moved it all the way up here, and now they've shifted sideways. So they're letting pro traders, nudges and other things, move the stock up, and it will stop here and move sideways again, and then it will move up again. And it usually takes about 3 tries for the stock to break to the upside or gap up. And it will be related to earnings. It will be related to earnings. So when you see it packing sideways and showing the pro traders nudges or tight compression with less and less wicks and tails, the wicks and tails shrink, the candles shrink, they're really small. And so they're not obvious to people because you're not used to looking for something like that. You're used to looking for engulfing whites or other common candlestick patterns that you learned. But now you need to learn the springboard pattern and the push and the pole vault and the hurdle and the sandwich and all the others that are new for our market. So we have nudges right here, and we have a move up. The move up was not pro traders. It was other small investors or a group that moved it up, or perhaps buybacks triggered on that nudging. So there's more nudging here. They're trying to nudge it up. It's moving sideways here. We have declining volume. Why would we have declining volume? Because there are still sellers in this group. There's a massive amount of people selling, but you can't see that on this particular chart. But all the drive is upward, even though the volume is lowering down, the drive is upward, but it will move sideways and pause. The indicator is showing that there's a battle here because it's not rising. So there's buy, sell, buy, sell, buy, sell, but the buyers are winning. The buyers are moving the price up. So this little indicator right here, which is a great one, it's accumulation distribution. We're showing small funds trying to sell into the bounces up of the stock because they're just sure that it's going to keep going down, and it's not. It's over. It may have some minor corrections. It may drop down again, but you need to be prepared. And when you see stocks like this, you can put them on a watch list and keep an eye on them, because when you're swing trading, you have to use watch lists. You can't just say, oh, okay, what stock am I going to buy today? Oh, let's see what everybody's talking about in my chat group. You can't do that because you're late. You have to be ahead of the crowd. You have to be trading with the pros. So learn these indicators. These are great. We've set them up in TradingView. They're available for anybody to monitor and watch. And you can trade this. So this stock is going to move up. One, it is way beyond the April flash crash low. It's bounced up and moved on up. That's something that you need to notice on your other charts when you're looking at other stocks. You need to say, okay, has it gone below the flash crash low? Oh, it has. Okay, that's the end of the correction. That, folks, that is it, because that was a bargain price then. And this is a bargain price because its earnings are higher. It should never have run down like this, but HFTs are gapping and running stocks down. And you can see as it runs down, there are some buy side institutions trying to slow it down, trying to slow it down, trying to slow it. It comes way down. They slow it down. It still falls. They are not worried about getting into the ideal price because they know that the fundamental values are way up here. The stock is really, really undervalued. Its fundamentals are up here and its stock price is way down here. That's not a good idea. That means the dark pools will be intermittently moving in and adjusting as they do their quantitative analysis, because right now they are talking to all of corporations that they have heavy investments in. They have 4,000 or 5,000 companies that they monitor, and they are adjusting for next quarter already. Yeah, we're right through the middle of March. They're busy looking at next quarter, and they will continue to nudge and budge the price up until it gets back into its buy zone, which is the fundamental levels need to be right here. So this stock is deeply panic selling, huge volume on this. The world's coming to an end. Don't do that. You're way smarter than that. I know all of you can do this. I am very confident. I get some nice letters from you, and I appreciate it. I'm really busy, so I can't always answer you, but I do read, and I do appreciate the comments that you send in. So this is the area where it will stop for a while, and will stop as it eventually moves up. But it's still having this constant. Okay, we're going to nudge it up. Oh, we're going to sell it on the bounce. Okay, we're going to nudge it up. Oh, we're going to sell it on the bounce. Small funds versus buy side. Buy side will win because they have all the money. Small funds managers with less than 5 billion assets under management don't have any big moves that they can do. They can't fight the buy side institutions, but they do. So it's a sad scenario because they don't really study charts. I've never had a small asset manager who came to me and said, I really need to learn stock charts. Martha, can you teach me? No, they think that they can get it all from retail news, which retail news is very dangerous and you need to be careful with. So today and right now, we have more stuff going on. We have a lot of action, but you have to understand that the stock market is its own solar system. And the stock market is the sun of that solar system, and all the other financial markets circular around it and are affected by it. So we have this solar system that's going on. And then we have the universe of the rest of the world that's going on. And our solar system of the stock market and the financial markets is separate. It's doing its own thing. And so you need to kind of back off on reading all the news that you do and focus more on learning to study the charts and saying, well, what am I seeing here? What is going on? Why did the stock start to go down and then pop right back up? Nudge. Okay, so you have a lot of things, and you will need to learn the springboard and the pole vault and things like that because they're really important. This is a pole vault, and you can trade and have more success, and that's what my goal is. I'm out of time. I know I chatter a lot, but I'm really excited to share this stuff with you, and I hope you enjoy it. I'm Martha Stokes, and that's our topic for the day.